Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks. And I got two more stocks for your aggressive growth radar screen. So let's get right to it. I'm going to do A's today. And the A's start with the biggest of baddest names in the A world. It's Amazon. It's AMZN. If you haven't been living under a rock for a long time, you might have heard about this company. They sell books online and maybe some other things. Well, they started off as a book retailer, but they've grown to do everything. It's the everything store. It is a strong buy. It's got an A for growth, as just about all my aggressive growth videos will have, and a C for value. Now, I like it when I see that. I like a strong growth score and a weak value score. That tells me right away I'm on the right path, because growth investors and value investors are inherently looking for different things. Company reported here the late January, early February beat, stock goes up and drifting higher. So that's that post-earnings drift higher that we like to talk about all the time. Mega cap. I don't even know, what is that, 1.8 trillion, I guess. I don't know how these numbers work. All right, let's take a look at the numbers we love to look at. Are they beating the number? The answer is yes, and yes, yes, and yes. And 51% average surprise. So they are going to be beating the number. If they miss the number, look out below. It will get crushed. But we don't have too much fear of that, because estimates keep on moving higher. 66 cents up to 81 cents. 86 cents up to 92 cents for the full year. 361 up to 408. 466 all the way squiggly line up there to 532. Gotta love to see that. Your mega cap stocks are great, but, at such a gigantic base of $640 billion in sales, double-digit sales growth is actually very impressive on that sort of base. And same for next year. And the thing that we're looking at here is there's really no rate of change. It maintains that growth rate. And some people say, I want that rate of change to go higher. But at this size, you got to be pretty happy with it. I think then it just becomes an issue of, can we move the margins higher? So let's see if we're moving the margins higher. Intent, I already know they are. All right, 42 times forward earnings. Not that bad for this big size that's growing at 14% most recent quarter. 8.8 times price to book. That, I'll tell you what, for what they do, that's a value to me. 3 times price to sales. Again, that's pretty good. Retailers, very low price to sales, but there is another component here, the AWS. So that this number should be, I would expect the 4 times price to sales. So anyway, that's just me. Here's our margins: 2.5% to 3.75% to 5.1%. I mean, we are seeing the margin expansion that you gotta love from a big base. That means earnings are just going to keep running higher. All right, here's our chart for Amazon. In the pandemic, they're gonna make out like bandits in the pandemic, and they certainly did, all the way up here to the tech wreck of 2022, giving it all back, and now going and getting it all back again. And if we, I'm gonna get rid of the stock line there, and I'm just gonna show you the space between these estimate lines. So the dotted lines, when you got big space like that, that implies good earnings. All right, that's Amazon. Aggressive growth. It is a grower. Maybe not so aggressive, but it's a growth company. It's growing, and I like it. Amazon, AMZN. All right, next up, it's Angi. Maybe you remember them as the old Angie's List. Now they're just Angi, but it's ANGI, the exact same name, the exact same ticker. Zacks ranked number 1. It's a strong buy. Again, an A for growth and a C for value. We got a nice earnings beat right here. Kind of a stock shot up and has come back in a little bit. Much smaller than Amazon, just 1.35 billion. But following that beat, estimates have moved up. I can tell you that already, because I see the earnings ESP at 25%. All right, let's take a look at our numbers. Are we beating the number? We beat handily here. We met earnings estimates there. We beat here, and we beat here. And importantly, our loss shrank, and we flipped to profitability right there. So I would imagine back in the past that they've done this already, but it's just good to see. Well, will it continue is really the $64,000 question. We have analysts looking for another loss of a penny, but that's 2 cents up since the last 30 days. Then the next quarter, break even. So those are good. And then for the full year, they're still calling it a loss of 2 cents, but the numbers are moving higher. And then next year, we're firmly into profitability, making 4 cents per share. Stock trading at only $2. So think about that. All right. Now, oddly enough, we've got a good growth score, but we're seeing revenue contraction this year. I would expect that to turn around mid-year. If interest rates move lower, people are going to want to fix up their homes and get them on the market if they've been trapped. So they would want the Angie's list to figure out, who are the best contractors to do what, where, when, and how. All right, 6.75% growth for next year. So contraction this year, maybe, if that number holds up, but growth next year for sure. Okay, what are our numbers like? Well, for some reason, it's giving me an A. I think that's because it was break even or maybe a loss of 2 cents. So we've got no future earnings, but price to book, very low, 1.27. The value players should love that. They don't get every credit for every dollar they sell. So they're priced at 0.92 times sales, which isn't that great. Big time revenue contraction here, 32%. So that's been holding the stock down. But margins are moving higher, negative 4.7 to negative 4.3 to negative 2.2. So even though we were profitable, there could be some other little bit of noise in there to kind of make it profitable. But as we move margins to become positive, we should see the stock make money, or the company make money, stock move up. Pandemic, we're all going to die. No, we're not. We're going to come back, and then we're going to have a tech wreck of 2022. The stock has not participated in the big run-up of late. So are we early to this party? Is Angie just not going to make it? I think Angie makes it. As you can see from the lines here, from the growth in earnings potential there. So this one, beat and has come back a little bit, but, I think that this thing has a good chance of moving higher. All right, and that's Angi. So Amazon and Angi, those are my A stocks for this week's version of Zacks Rank Buy. All right, that's it for me, Brian Bolin. Be sure to join us next time when we put 2 more stocks on your aggressive growth radar screen. And until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.